Howdy traders. I'm doing a weekend video real quick. Just some charts that I was looking at. Let's see here. We've got let me here. Okay, there we go. GE. We're starting to get a little compression on our MAs, and we might be carving out a bottoming process on General Electric here on our smaller time frame here. I think that's our daily time frame. On our daily time frame, if you go on our weekly time frame, you can just see just how it's just been total carnage in General Electric here, with the markets breaking out and everything. So just keep this one in mind. Them cutting their dividend and stuff spooked investors, but they're going to benefit just like all these other companies with these lower expenses and accelerated depreciation tables. Boeing has just been totally on fire. Well, as of Friday, we've actually come up, and in my opinion, we're tagging a resistance zone for Boeing. So I'm not saying we're topping out here, but this is the spot where you would logically think that there could be some profit taking on Boeing, even if it means short term. And if you go back on your daily time frame, you can see it tagged it to the tick Friday. Another one I'm looking at, that's Costco, and this is a competitor to Sam's Wholesale, and something that a little concerned me about Sam, they're closing down a bunch of the Sam's and laying off a bunch of people. Walmart is. So we are at a reference reflection point to the downside historically for Costco. So this to me is a more bearish scenario, and I would be careful to the long side. Zuckerberg came out Friday and he announced that he's changing the business model to be more user friendly, or to protect the users more. And the stock got just decimated Friday. So just keep this one on your radar. If you go out on your weekly time frames, I mean, you've had one heck of a run on Facebook. This is not one that I would necessarily, with the announcement that they're changing their business model, this is one that's probably going to fade. Apple closed at the top of a range, okay, and it's been traveling along this trend line, so just keep this one in your mind. It is a little bit extended from the MAs. So it's going to go, Apple's going to go with the markets. If the markets continue to go higher, it'll go higher. Another thing that I wanted to point out, the times that we did get a pretty good rally up into this next fib zone, it's come off of a tight compression area on your MAs. And we don't actually have that right here. So just keep this in mind. If the markets go higher, of course, Apple's going to go higher, but we don't have that compression to catapult us higher. American Airlines came up to a reflection. This would be the area which you would think that some profit taking might come into play for American Airlines. The airlines, the accelerated depreciation tables are going to be awesome for the airlines. So I don't know if it'll even remotely stop here. It's just something that I wanted to point out, that we are at a resistance zone. CVX is going to be a major beneficiary from the new tax code, because believe it or not, Chevron is one company that has some of the highest expenses, operating expenses in the country. So they are going to save considerably on with the new tax code, and we are pulling considerably away from our MAs here. So just keep that one on your mind there. And if you go here, we are at a double top on the weekly for Chevron. Some stocks on the dip you might want to consider here. Philip Morris. This is a consumer staple. Keep that in mind. But the reason I'm kind of interested in this Philip Morris is because of they pay out a whole lot of taxes. And I think they are going to be a major beneficiary for this new tax code as well. So this is just one you may want to keep in mind here. We are a reference support zone, and it's held for quite a while here. So you know if it starts to go against you, how soon you have a defined exit if you want to enter here to the long side. And we do have a what do they call it? We have a MA compression in play right here. So that means we are building up momentum for either a break to the downside or a break back up to the upside. And Philip Morris is one of the most beloved companies in the country. And the last one I want to talk about, which is not, DMAs are really not showing it, especially on the weekly. I think eBay is going to blow the numbers out of the water this season. So this is one to keep on watch here. I do think it's going to have a very good earnings season. Now this one here, it's on your daily right here. You do have a clearly defined stop. If it, like 2 days ago, if it gets below that low, so say 37.50. If it starts to go below 37.50, so you're about 50 cents from what could be a stop loss set right there. But this might be an opportunity to the long side if the markets were to continue to the upside. So, but eBay is one of my favorite companies out there, along with Google, because of course Google owns eBay. Okay, one index I want to show you too. Okay, our retail index XRT, we are seeing a double top right here from back 2016, November 2016 highs. So here we are, we're going into earnings season. We haven't actually had any real numbers out yet, but we're already putting in a 2016 high on our retail index. So just something to keep in mind there. I do think that the retail index is going to go higher, back to all-time highs on this earnings season. So, but I did want to point out that we do have a resistance zone going into this week's earnings. Okay. And one last thing I want to talk about are the earnings for this week. Give you an idea how things are going to go here. Alcoa has been going to the moon, and they report Wednesday after close. So keep this one in mind. And you do have CSX as the first railroad to report, and you have your transports going to the moon. So we do have some significant market movers hitting the tape this week. So just keep that in mind. And good trading, everybody. And please make any comments you can at the bottom of the video. And if you have any questions, just contact me. Thank you.